Good afternoon and welcome to CanadianAgMarkets.com. My name is Brian Como. Today is Friday, a nice sunny Friday here in Winnipeg, Manitoba. May the 2nd it is today. All right, let's get into what is happening in markets. It was a pretty good day today. So we saw canola rise $11.40 on the November to settle at 708. Minneapolis wheat up 15 and a half to 611. Kansas wheat up 13 and three quarter at 541.25. Chicago wheat up 12 to 543. Soybeans up seven and three quarter to 1058. Corn up, down three and a quarter to 469. And the Canadian dollar up about a 0.25% to 72.42. I'm not going to touch on wheat too much in this report, even though we did see a good day in wheat today. I'll just say it looks like a bit of a position squaring, maybe some profit taking on short positions, or just reducing the size of short positions as we get into the end of the week on wheat. I didn't see anything other than that. There's been a significant amount of weakness in wheat in the last week, and I think that there was just some profit taking and things like that. So unfortunately, maybe Monday we'll focus a little bit more on wheat. I know we had done so earlier in the week as well, but today we're going to focus a little bit more on canola. Once we do that, though, or when we do that, though, I'm going to I'm gonna plug our reports here. So look, I'm gonna share some stuff here today that would normally be reserved for our premium subscribers. In fact, we have been having these discussions with them for a couple of weeks now. So you should become a premium subscriber. It only costs 99 bucks a month Canadian. You can cancel anytime. Just go to canadianagmarkets.com/subscribe to subscribe, and I'll also put the link in the description. All right, let's talk a little bit about canola. Um, this is the July canola chart. Today we hit a high of, or we ran up to about I think it was 709. We settled very near that at 708 and change today. Very good day for canola. We're still kind of waiting for that, test of 711 at this point. I don't know. It feels almost like it's a bit of a self-fulfilling prophecy. Everybody sees that 710 level on the chart and they're like, "Hey, let's go take a run at it." So, the market's tried a bunch of times to do that. It hasn't quite got there yet. At this point, it looks like a pretty safe bet that it will reach 711. What happens after that is anybody's guess at this point. However, I think, in order to simplify things, everything still looks relatively bullish in the canola. This chart looks bullish. We continue to see building of the managed money net long position. In fact, they may have a big part in what is happening here in the July contract. So overall, it's hard to find bearish information on canola other than the fact that it's has not yet broken into new high territory or moved above that $711 area. A couple of things I want to do want to focus on though. Here's ICE canola board crush margin. So what I want to highlight here, I'm just going to put my highlighter here. What I want to highlight here is just a couple of things as we kind of came into this calendar year. In January, we saw crush margins rally up to $180, and then in March, we kind of saw a double tap of that same kind of thing. My feeling here, and this isn't necessarily scientific, is that crush plants purchased or made a lot of deals for crush. Why wouldn't you when margins were good, right? You want to be able to lock in margins when crush margins are good, and you can't necessarily always back to back either the sales of those crush margins or the purchasing of the seed from farmers. So my guess is that the margin was booked. Perhaps some of the sales were booked for oil and meal. Those tend to be a little harder to get, last minute. So we probably secured the sales side of the crush margin components. The crush margin itself was hedged when the crush margin was high. The only component left standing after that was buying seed from the farmer. And as we know, that's relatively hard to do at a time like this when supplies are tight. Farmers are going into the field to seed the crop and just generally not interested in selling. So, in my opinion, this is one of the reasons why we are seeing a rise in the canola values here is because crush plants are looking to fill some of the sales that they made or some of the crush that they had booked previously for, June, maybe even May, June, July. At this point, they filled what their main needs are. There might be some scrambling for June, and then the rest is left till July. I think the best bids I'm seeing are still for June delivery, which suggests that those sales are made for July forward. That's the way the market is structured at this point. And I would say these crush margin rallies are a big part of what is happening in the canola market right now. As you can see, crush margins have fallen quite considerably now. So there's less incentive to book new business. And I think the knowing also that it's hard to source the seed from the farmer going forward. We may be actually done with the crush program, at least the trading of the crush program for the year. So if at some point this market is going to top because of that, because they're not booking new business, or maybe scant new business at this point. That's just my opinion. Take it for what it's worth, but that's what I think is partially what's happening here in this market. To kind of back that up, here's the crush pace that we've seen so far this year. Almost 8 million tons has been crushed as of the end of March. We're probably above or about at 9 million at this point using this crush pace as we moved into the start of May. Very good crush pace here. The best that we've seen so far. That only looks to expand. We're adding some crush capacity as we move through fall, particularly in Regina. But excellent crush pace. This has been a very good bright spot for the market, but it's not the only bright spot. This is cumulative exports as well. Just under 8 million tons has been shipped this year. I think it's 7.8 million. This is according to CGC, which they always tend to understate the exports as well, because they don't count non-licensed exports in that number. So we're probably around 8 million tons of total exports. Normally, or last year, we would have exported about 4.5 million tons. So a significant change year over year in canola exports. And as you can see, we're even running ahead of average here. We're normally averaging between 5 and 6 million tons at this time of the year. So both exports and crush are overperforming this year. Just to kind of add another look at the crush market here. This is monthly numbers. As you can see, we've seen a number of record high crush months. Most of these, so this is just a year over year comparison, but most of these overperformers from last year are new records as well. This 1.2 million tons stands out in October. We also saw March at 1.1 million tons. So the crush program is just kind of firing on all cylinders right now. Another thing that makes us sit up and take notice here is the canola July NOV spread. This has widened significantly in the past few weeks here, or from the middle of March, when it hit some lows. It's now pushed above $50 between the July and the November, besting even the spreads that were earlier last year, even actually. So this is just on fire right now. It's hard to call a top on this July NOV spread, and it really accentuates the fact that there is significantly more demand right now for the seed in July and not the NOV. So normally we see an inverse, right? But normally it's not this high. And we also see basis advancing in this marketplace as well, which points towards the fact that buyers are looking to source physical seed from the farm gate. Here's some additional kind of proof of that. We haven't seen super aggressive basis pricing yet. We're still close to option. Today's best price that I saw was in the crush plant at Camrose, which is Cargill's crush plant. They put out a 615 cash, or they were picking up bids or whatever at 615. Some business got done at 615 for spot or for June delivery. Again, that implies about a 5 over, 6 over basis, depending on what futures value you use. But crush is still paying the premium here, and of course, the further west you go into the freight grid, the better the bid as well. So basis has been expanding, not necessarily as fast as as futures. Futures is doing a lot of the work right now. But if that gets exhausted, particularly with if funds decide that they're done purchasing as well, that could help rally the basis. Although you may see an opposite action in the futures market if that happens. Not that I'm calling for that either. I think actually both look very strong going forward, and I think overall it still looks relatively friendly for both canola basis as well as canola futures at this point. All right, so let's take a look at November now. I'm going to share a strategy here with you. November did not make a new high today. Um, it has been kind of bouncing around recent highs, just south of $670. We finished the day off today at 657. Um, it's struggling a little bit more. It still is, bullish according to the charts. We still have a trending upward here. The market still hasn't moved below the 20-day moving average. It's consolidating near there right now, but still overall, still relatively friendly. It's kind of giving us a lot of time to take action on new crop, which we have been recommending doing. We actually did that officially last Friday, a week ago, but I did want to outlay a strategy for you because this is a pretty common one and it's a very simple one. It's using averaging contracts for your initial new crop pricing. Here is what last year would have looked like if you would have engaged with an averaging contract, which is just a contract that averages the close over time. There are a lot of buyers who utilize this contract. They all call them something different, right? G3 has this contract called a daily market contract. Cargill has a contract called Pacer. Viterra calls it the futures tracker. I'm sure Bunge has a version of this as well. They have much more complex contracts listed on their website, so I can't imagine they don't offer something as simple as this. And of course, you can also do these style of contracts with your broker. Um, but as you can see, averaging through the month of May and through the month of June yielded a significantly better result than waiting for harvest or taking the risk that the prices fall in harvest. They did so in 2024. It's likely they're going to do that again. That's a normal seasonal pattern to occur, even in bullish markets, believe it or not. So we often see the highs of the market, in through this May and June period. And guess why that is? You guys are busy. It's hard to pull open the bin door and get grain moving. The bids tend to move up. The futures tend to move up. This is generally the most opportune time, particularly to price new crop prior to harvest or for harvest delivery, or if you need harvest cash flow. So again, this is a contract that I have always been an advocate of. It's simple. It's never going to pick the top of the market, but it is a good disciplined approach to start your marketing or even to benchmark your other marketing against. So we do highly recommend this contract for your new crop marketing. All right, let's get into some headlines here. Much of the trade over the last couple of days has talked about the easing tensions in the trade war between China and the US. Currently, it looks like China is evaluating an offer from Washington to hold talks over President Donald Trump's tariffs. China's Commerce Ministry has been pretty vocal, and they said on Friday that they're signaling a potential of de-escalation in the trade war that has affected global markets. Their quote is, that the U.S. should be prepared to take action in correcting erroneous practices and cancel unilateral tariffs to show sincerity in negotiations. To me, them sounds like fighting words, but when told what to do, Trump tends to act in a way that protects his previous statements. He has an ego to protect, and he tends to do that. We kind of saw that with the Ukrainian president, Vladimir Zelensky. So he can dig his heels in a little bit if kind of threatened. But the ministry went on to say the U.S. has recently taken the initiative on many occasions to convey information to China through relevant parties, saying it hopes to talk with China, attempting to use these talks as a pretext to engage in coercion and extortion would not work. That's a quote from the ministry as well. So although overall this is being seen as positive, There is still no talks happening so far, and the talks, and it could become a battle of egos pretty quickly if China continues to use strong language. So, although it looks better this week, it's still a precarious situation. I would call it. An article in the Western Producer highlights some of the shortage issues affecting the nitrogen supply. The article mostly focuses on India and the pull on fertilizer from that area of the world, but it may have some implications on the summer fill fertilizer program here in Canada. So I thought I would just highlight that as well. Another big story here, Bunge's global proposal or proposed $34 billion merger with Glencore and Viterra has hit a significant roadblock due to escalating trade tensions. So, when we think about what's happening in the trade world, it's not just necessarily the flow of commodities, but also with just business relationships in general. The deal was announced already back in 2023, and it is seeking regulatory approvals. Approvals have been secured from the European Union and Canada. The deal awaits clearance from China, and so it's a critical step for finalization. The broader backdrop here includes heightened trade frictions. Obviously with the U.S. imposing 145% tariffs on Chinese goods, and China responding with 145% tariffs, and these tensions are causing delays in cross-border business dealings, which include this merger. So, the impact here on Canadian farmers, the delay prolongs uncertainty for grain producers, particularly in the prairies where Viterra is most prolific here. We're watching closely due to the potential implications for market access and competition. So just to kind of update you on that headline, that is all we have for you today. We hope that you have a great weekend. It looks to be a pretty dry and moderate weather over the prairies this week. So we hope that you get a lot of field work and seeding done. And we thank you for tuning in. We will see you again on Monday.